Hello viewers, we'll be going over the S&P 500 ETF ticker symbol SPY. In this video, we'll be going over the day-by-day probability model, the percent comparison, how we find the models, and the day-by-day forecast for the S&P 500. So back to the technical analysis. Today we're down 1.3% on the 1 hour chart. We are approaching negative MACD, and if we extend out to the 4 hour chart, we are approaching to positive MACD. However, we have still some way to go for that to happen. And as for the daily chart, we're still near oversold RSI as well. And for the daily MACD, we see no signs of convergence in play for the daily MACD. And at the moment, we are quite near the support back in 2008 or 2018 December. So we'll mark that as our immediate support if we do have a lower chance of heading lower. And then if that does fail, the next possible support that I see will be where we see, if we extend out to multi-year on the weekly, we might see a possible support where we had resistance back in, I would say, May 18 or May 18, 2005, 15 to all the way September 12, 2016. So there is a multi-year support around that range, and that is around a price of $213.40. And if we were to fall lower and break the support made back in December 2018, that price movement is roughly around 8.5%. So there is a possibility the S&P 500 may continue to dip lower as the cases continue to rise all over the world, including Italy, Spain, and the United States. So if we do manage to make a reversal and head up higher, the next resistance that I see is the 9-day moving average, which is this blue line, and that is around a price of $255. And we had a slight resistance at that point in time as well. So if we do manage to climb higher, that price movement is roughly around 8% to the upside. So let's head to the day-by-day probability model. Again, this model is now available in the link below, so do check it out. So as we examine the model on the 7th day, we have a 100% chance for the S&P 500 to climb higher between 0 and 2.7%. The reason why we have 100% is that we only have one model to base it on, and that model, if we examine, is June 11, 2002 to July 24, 2002. So let's examine where that trend progressed throughout the days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So if we examine that model or that trend in the past, we have the current trend right here, and below is the trend that I believe is the trend that is the best match to the current trend. Again, the trend dates back to June 11, 2002 to July 24th, 2002. And the trend is quite straightforward. We only average below the middle Bollinger Band, grinding along the bottom Bollinger Band. So we have that pattern there. And one thing to note, this is only a 30-day pattern cycle. So we usually do a 60-day pattern cycle. We did not quite find a pattern that is similar to the current trend. So this is the best match that we have at the moment. And we only have this trend that grinds along the bottom Bollinger Band and averages below the middle Bollinger Band. So we only have this pattern to keep in mind. And back then, the S&P 500 back in 2002 was up around roughly around 2.2%. And let's examine the technical performance for the S&P 500. So as we examine the current trend, we are currently down 34% from monthly high, 5% from monthly low, and we are down 7% from 10 simple moving average, down 14% from 14% down from 20 simple moving average, And since we're only examining 30-day cycle, we do not have the 50-day simple moving average in play. And now if we examine the trend in question, we are down 24% from monthly high, up 5% from monthly low, 4% or 3.5% down from 10 simple moving average, and 8% down from 20 simple moving average. These two trends are somewhat similar in the extremes, so the percent movement down in the downtrend, so do keep that in mind. And again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.